everyone. It's Stuart here again. Let me just check everything's okay with the audio and the video. Video looks okay. Let me just check the audio. Looks like we are okay to go. 1, 2, 3. Yeah, you can hear me loud and clear according to this. So I'm assuming everything's okay, unless you tell me otherwise. So I hope you all had a peaceful weekend. It was a long weekend for some of us. It was Easter. We had Good Friday and Easter Monday yesterday here in Europe and Australia and New Zealand. The US markets were open yesterday, and of course, they bounced back a bit today. We had a big move down, negative worry about Trump's comments about Jay Powell. We were off 2.5% on the Dow, 2.36% on the S&P 500, and 2.55% on the Nasdaq 100. Remember, we were short from I think Wednesday or Thursday last week. We'd hit target one on the Dow initially on Friday, I think it was, or Thursday. But we hit the other two sort of provisional targets I'd put in. Remember, we didn't actually set a target when we opened those trades last week, but I'd marked the chart and it got to there. So we'd taken half of the positions off on the Dow. On the S&P 500 and the Nasdaq 100 as well. But more on that later on. Obviously, this is a timeless sort of video we're doing today. It's a webinar on pivot point trading, the power of pivot points, whatever type of pivot points you use. We're going to look at floor pivots today. They're the most traditional, typical. They were the first and the most traditional that you see on charts. But the beauty of the proptrade.com using TradingView is that you have a lots of different pivot styles you can add to your charts, and we'll look at the actual setup of the charts later on as well. So pivot points can be used for any sort of time frame. We're going to look at intraday trading in particular because I know that's what a lot of you are more interested in. But they do work on higher time frames as well, and we'll have a look at the pros and cons of obviously the use of pivot points and support and resistance, and how many we want to put on our charts. There's a lot, again, where the power of TradingView, you can have multiple support resistance levels going up to 5 or 6 levels. For me, I think that's a bit too much, but anyway, it's what floats your boat, my friends. So pivot point trading in the next hour or so. If you've got any questions, obviously, as ever, stick them in the question box. We're here to help. I hope your trading's been going well. We've had a great start to the year. We're up for April as well. We got 200 and odd points on the Nasdaq this morning and 48 points on the S&P 500. Half of the position taken out, so we're in the money for April. I'm going to close my April account the end of this week because I'm away for 2 weeks in May. So I'm going to start the account for May beginning of next week, even though we've still got a few days of April left. But anyway, here we are, April 2023. I hope you're all well, and let's have a look post Easter. I ate far too much chocolate, but anyway, got the rest of the week to work that off. If you don't know who I am, my background is in the City of London. I was there for 20 odd years. I worked for a retail bank, the Royal Bank of Scotland, for many years, and then I worked for as a contractor actually at UBS, sorry, not JP Morgan, UBS for a number of years in a relocation project of theirs. Did lots of other relocation projects. My background is really in telecoms, networking, project management, all around the city trading floors. And I've been dabbling in the market since the late 90s. 1997 was a big kickoff year for me. If you've not heard my story, I'll tell you it some other time, why I actually started investing heavily. Probability, simplicity, and multiple timeframes has always been my mantra. And more importantly, I learned very, very quickly, very early in my trading and investing career, to understand yourself is by far the most important thing, especially when you're doing short-term trading. In particular, for me personally, anyway, always do what's probable, keep it simple, and understand the basics. So leverage, margin, all that sort of good stuff. What a spread is, why spreads move, why you can get fixed if you get fixed spreads, what's the downside, commissions on any account you're using, difference between futures and options, CFDs, whatever it is you're trading, understand the basics, guys. But importantly, understand your risk management profile. It's all about risk management. It's all about managing yourself, manage your emotions, accepting your losing trades, and we're living to fight another day. So today we are looking at pivot points. Let's make the slides a bit bigger. So if you're doing a screenshot, you can do a decent screenshot. Is that big enough, or should we do it that way? I think that's big enough like that, isn't it? Yeah. Okay. So we're going to look at what are pivot points, how we determine them, the characteristics, the mechanics, the maths involved of pivot points. Pivot points and trading systems, so particular trade signals potentially. The pivot points plus support as a support and resistance line, horizontal line on your charts. We're going to drill down into just the three areas. I know most trading software offer you more than the three levels, but S1, S2, S3, R1, R2, R3. So the support and resistance zone. During the day, during the next 15 minutes, during the next week, however you set your pivot points up, and pivot points over multiple time frames. As I said, they're applicable regardless of the time frame that you're trading. Obviously, again, with all sorts of indicators and technical analysis, it tends to be proof of thumb. The higher the time frame, the more significant the support and resistance level is, and that's no difference with pivot points either. But you still get a feel for the market, and it's if you've come in cold, you've been away for like a few days, like I have from the charts, or you've taken a week off or 2 weeks off, you come back in, the pivot points tell you the maths of where we were the day before, the week before, the month before. Really quite useful lines in the sand on a clean chart. So determining pivot points, they are used by technical analysts like myself, determine the overall trend of the market. Is the pivot point moving up over time? Is the pivot point moving down over time, over these last 10 hours, these last 10 days, these last 10 months? What's actually happening? Are we just going sideways? So they're based on previous action, so they're lagging in a sense, but they're a predictive indicator, because you get a pivot point series of support and resistance levels as well for the next session after this previous session has closed, depending on your time frame, again depending on the levels that you're using. So they are a predictive indicator. They're a bit more useful than some. Okay. By their very nature, as that second point there means, there can be, a point of congestion, a point of where things may change. We may get a continuation if we've got a strong trend moving through support, moving through resistance 1, 2, and 3 very quickly. And you get blown out. So we don't get to resistance 3 very often during a day, a day by day. But when we do, it can either be a sign of a really, really strong trend about to erupt, or continue to erupt, or a big turning point in the chart as well. So may change, not always going to change. Technical analysis indicator, potential support and resistance levels, or they are predicted as support and resistance levels based on the previous price action movement. So it's quite a simple formula. It's not complicated. So a pivot point for the current session or the current time frame is the higher the previous time frame. So it's a minute, an hour, a month, a week, it doesn't matter, plus the low of the previous time frame, plus the close of the previous time frame. Again, doesn't matter the time frame, but divided by 3. So it's an equal. So it gives you equal balance between the high, the low, and the close of the price. So again, the close of the price on a Friday is the key price for the week, isn't it? That's where the price closes. If you're an end of week trader, the close of the price on the 31st of the month or the 30th of the month is the key closing price of that month, okay, or that 4-week period, or that day, or that hour, whatever it is. So the high and the low of the particular time frame that you're using. It's as simple as that. These are floor pivots we're looking at, and I'll come on to explain the difference in the others in a little while. So that's the simple maths that's involved. So why would you use a pivot point? It's just extra lines on the chart. It's just, let's say with some if you're using native trading view, you can have five, I think it's 6, I think it is, or 7. I'm not quite sure. I'll have to double check that when we have a look at the charts. But there's loads of potential lines on the chart. Can just get very confusing, some people say. The beauty of them, you set them in advance. So tomorrow's pivot point can be set on the close, instantly on the close of today's action. For the next month, next week, you can predict forward. So they are potentially quite predictive as well. Predictive levels of resistance, particular levels of support. We're going to focus in on floor pivots. Let me just bring up the charts. Actually, I've talked about all the jargon. And let me just bring in my charts, which seem to have disappeared for some reason. No, here we are. So let's bring in this. So let's just bring in the trade. We've got this going. Oops, let's just bring, not that one. Do you want that one? Oh, that one, didn't I? So let's just clean this up a bit. Get rid of the markets panel and the order panel. We're not interested in that at the moment. So this is the euro. Hopefully you can see that. I can't see you guys now. Hang on a minute. Let's see what you can see. Oh, why can't? Can you see what I can see, my friends? I've washed it. There you are. Just see what you can see. Yes, you can see the charts, right? Okay. So pivot point. So this is a clean chart. This is the euro on the 1 hour time frame, and we've got pivot on the floor system. So if we look at the settings on when we look at pivot points, so settings here. So to add them, you just go to the indicators, type in pivot points, pivot, and you see pivot point standard. Okay, there are different views, but let's not get carried away. So you click that and it automatically jumps it in. What it gives you though are some settings, obviously. So you can either decide to show like past experience. So if you click this historical pivots, it'll show you back as many times or as many periods as you're looking at. So here on the hourly chart, sorry, the daily pivot points, it'll count back the number of days. So if we got 5 set in at the moment, we go back a week basically, so 5 trading days. So this takes back to last Wednesday, the 16th, 17th, 18th, 19th, 18th, 21st on Monday, and today's pivot point much wider. You can see the range is much wider because we've moved up. But you can see here the blue line is the main pivot point. So this is the euro. It's been going up over the last few days. So you can see the pivot point for the days has gone up. So it went up. It started down here on Wednesday, Thursday, Friday. It sort of went sideways, ticked up a bit yesterday. It's moved up again higher today because we moved up significantly on Friday. We moved up earlier today above that pivot point, but we're now down on the pivot point heading into the S1 area. But more on that in a little while. Okay, so if you're interested in taking it back 2 weeks or so, you could put in 10 and you get a longer count back. So again, you can see the hopefully you can see the blue lines here on the white background. So back 10 days, back to the 9th. But you can see generally as the price has been going up, obviously the pivot point's been going up. We didn't move very much, did we, for about a week? Lifted up today. Is that the end of the run? Too difficult to sell. But anyway, we're just interested in what's going on in the day. Okay, so these are the range of floor of the pivots. So that's the count back. So we just move that back to 10. Sorry, to 5. Now then, different types of pivot time frames here on TradingView. Auto will just calculate what it can see on the screen. So if we click to auto instead of daily, you can see we've got a bigger range. We've gone back to, it's filled up. We've still gone back 5 days, but it's filled up a wider range. You see here yesterday the R1 or the R3, the extreme, went to 120.70. Okay, because it's still the type of pivot is a floor pivot. Okay, so we just move that to the daily. You can see we're just calculating on the previous day's action. So much more. Actually, let me just get rid of that. You can see that the yesterday. See yesterday how compressed it was. That's because there hadn't been much action the previous day. It had been very, very tight. on Good Friday. Very little action going on. All the major markets closed. Some Asian markets were obviously open. Japan and China markets were open, but the other major markets were closed. And so the range, the volume, the distance we travelled, the ATR over the day was quite flat. So our range, support and resistance areas was tighter. Yesterday, we had a big rally up for the euro, and therefore the spread of the support and resistance area for today was much, much wider. You can see that. So it's all dependent, when we got a daily setup, all dependent on the previous day's action. You get an idea of the trend as the pivot points either moving up or consolidating here. We've gone sideways or moving down. Okay, so settings are quite key. Okay, so that's on the daily countback. And then there's lots of different types of pivot types. Carmela is quite popular. Woody was invented about 50 years ago. Fibonacci are what they say, so they put the Fibonacci levels on. So if we click the Fibonacci ones here from the floor, you can see instead of being regular distances between R1, R2, and R3, they're based on the Fibonacci range of the previous day. So again, because we had a bigger range yesterday, we got a much wider range for the support and resistance levels today. So it's based on the Fibonacci. So you're a big Fibonacci fan, which I am. Some people use their pivots on the Fibonacci settings. What I'm using today is the standard, or the classic, not the classic, but the standard default setting, which is the floor setting. Okay. If you want to investigate other types of pivot points, feel free. And as I say, Camarilla and Woody have some big fans out there on the internet. So I'm not an expert on either of those, but I know there's some big advocates of those particular settings as well. But today we're going to use floor, and that's simply because that's the ones I first used when I first started trading, and I haven't really changed much since then. And they're the basic ones that come with basic software and platforms. I think both CTrader and MT5 use floor pivots as their default pivots. I'm not sure it's on MT4 pivot styles, but anyway. So what we have set up on our charts, we're going to look at later, is floor and the daily, and we'll come to that later when we look at some more charts. So we'll come back to the charts in a minute. Okay, so you can see the support and resistance levels they create, and we can get some sort of indication of what's going on. So we can use them with other indicators as well. You've just seen those charts that just simply the candlesticks and the support and resistance areas. As with any indicator, it might be an idea to have us another, something else on there, whether it's a moving average, whether it's a stochastic, whether it's a MACD. We'll see. So you could have a MACD cross, the K and D line cross on stochastics or something as we get to certain pivot point areas. So it's an interesting way of doing it. We'll have a look at some styles later. We'll have a look at a pivot point exclusive style trading in a minute as well. Okay, so because they're based on mass. Next point, they're objective. There's no discretion, so you can get some key clarity. So it's quite often used as a sort of as a stop loss area, as a target area, and as they can be used with they're applicable because it's simple maths based on price action. So there's no other as we saw, simple dividing of 3 of the high, open, low, high, low, and the close divided by 3, so they can be applied to any time frame. So from scalpers at 1 minute, and again we'll have a look at that in a minute, to weekly charts, monthly charts as well. Good potentially for confirming a trend or identifying a trend reversal, and potential breakout areas as well. The direction of the price, obviously, and it minimizes your risk to an extent. There's going to be some sort of potential stalling potentially at a pivot point area or at S1 or S2 level. And there's lots and lots of data around pivot points because it's simple maths. You can work out how often does R1 get hit on a daily basis. How often do we get to R2? It's very easy to crunch that numbers. I did some a while ago I'll share that with you in a minute. So as we said, simple maths and how we get the R1, R2, and R3 from them as well. So the current pivot point, is of the previous price action is the high plus the low plus the close divided by 3 gives you the pivot point of the asset that you're trading on the time frame that you're trading. Okay, so it's literally that. Like, so what is a pivot? Well, it's like in balance, isn't it? It's like, buyers and sellers are in balance. If we're above the pivot point, that's obviously more bullish. If we're below the pivot point for this current time frame, that's bearish for the time frame. Okay, if we're continuing below the pivot points over a period of 5-6 hours, if we're using hourly pivot points, that's a downtrend, isn't it? If we're doing it over 4 or 5 days, that's a downtrend on the higher time frames. Okay, so we next level could be that the S1 level if we're going down. Our next level down would be the S2 level. So that's the key area. So once we're above or below, many days, because it's based on the previous high, low, and the close of the previous session. Sometimes we just meander around the pivot point. Sometimes we're up constantly below the pivot point, never get to S1. Sometimes we're above the pivot point. There's no much action on the day. We never get to R1. So it's not much price action. If there's lots of volatility on the day, we could chop from R1 to R2 to R. From S1 all the way up to R3. Who knows? But it's all gives you an indication of what's going on during the day and gives you some sort of idea where the move might go. So first level support and resistance is known as R1 or R2. So resistance is obviously to the upside, support is to the downside. So there tend to be, again, the maths involved. It's twice the pivot point minus the low of the previous period gives you R1. Support S1. Again, twice the pivot point minus the high of the previous period gives you S1. Again, very, very simple, isn't it? So that's what you might expect. And they're the key levels. They're the ones that get touched the most. So again, there's some guys I know that traders that I know. I'm saying guys, it's a particular lady actually trades this way. In particular, the one I'm thinking of. And she just uses the pivot area and R1 and S1 because she knows that they're more likely to get hit on a daily basis. Therefore, she doesn't really use S2 and S3 or R3 and R2 and R3. But anyway, that's just her particular style of using. So they're the ones that are most active and they're the ones that cause action. So she sets up alarms when these areas are getting hit. Sometimes when we're sort of ranging around the pivot point, her alarm, I've watched her alarms can be going off every 5 minutes or so as the price is moving up and above and below the pivot area, causing false breaks to the upside, false breaks to the downside until it moves in one particular direction. And then she uses R1 or S1 as her target area, and she's very successful. She's been doing it for many years. But anyway, so S2 further out, less likely to get hit on any particular time frame because it's using the pivot point minus or the already level that's been predicted S1 plus resistance 1. Support 2 or S2. Sorry, I said R, didn't I? So S2 is the pivot point minus the resistance, the first resistance minus the first support area. So again, that gives us second support area. Further down than S1, further away from the pivot area, further away from the price action. And then finally, I'm saying finally, but I say with again, I'm saying finally, but let me just again bring in the live charts, and you can see on a trading view, you can have more than S1, R1 at 3. If I visibility, hang on a minute, I'm sure it is inputs. Where was it? Because I took these off, didn't I? Oh, no, it definitely goes beyond S1 and S2. Where can I show? Can't remember how I did that now. So, Anyway, I'll find out. I will let you know. Okay, but you can add, more than so you can have sort of S4, S5, S6, S7 as well. But more on that, say. Not many people use that, to be honest. And these are the most popular. These are the most common you will see. And as I say, the most common of all is the pivot and just R1 and R2. Sorry, R1 and S1. But typically, if you're going to if you use them as trading areas, it's obviously good to know where S2, S2, R2, S3, and R3 are. So. And again, the same maths. You use the same maths to create the fourth levels, the third levels. A little again, this isn't this is just an idea that some people use. I've used in the past. It gives you this idea of a 2-to-1 risk reward ratio as well, because of the maths involved. So pivot to S1 sorry, pivot to R1 R2 if you're going higher. You can work out your risk reward ratios as well quite quickly. On the simple lines that are on the chart when you're using these floor pivots, because they're equal distance based on the previous movements of the chart. Okay, so this is a screenshot from a few years ago, quite a long way, a long time ago now, 2017. So you can see the actual maths worked out here on this is dollar CAD on the 4-hour time frame. This is from an MT4 platform. I say from a long time ago, 2017, and you can see what we're talking about this risk reward ratio. So this is the maths that's involved. This gives us our pivot area 128.51. 128.51 is our blue line through here, 128.51. Well, it's in blue line. It's actually there, 128.51, and our maths creates our support areas. So S1, 128.34, 128.13, and 127.96 below the psychological 128 area, as it would have been here. For S3 down here, 127.97. Also happens to be on this chart, it happens to be a moving average by the looks of things, a blue one. I don't know whether it's the 50 or the 2 or whatever it is. It doesn't matter, but it's giving you another idea. Look, the moving average and the S3 area, that's providing a big area of support. Looks like there's Bollinger Bands on this chart as well. So there's our 20 period moving average. If this is a default set in a Bollinger Bands, looks like the Bollinger Bands, and that's sitting where the pivot point is. So that's again a double resistance area or a double confirmation of the pivot area. So the pivot area is key. Here you see the chart had been going sideways. Currently, though, we're moving down. We've been through, we're under the pivot, under S1, and we've gone in to test S3, which is this area here. It's 128.13. So we're still 13 pips from the big round number at 128, but there's a big support area there as well. So we maybe that trend is still set, but the S1 and the bottom Bollinger Band line as also coexist in the same place. So again, it looks like the stretch to S3 probably isn't going to happen because there's a big support as we poked out of the Bollinger Band for the first time in lots and lots of candles. This last time was here. So again, this is using pivot points with Bollinger Bands and moving out and a higher time frame. I'm assuming that's a 50 or a 200 moving averages blue line on here. Maybe wrong, but anyway. What the maths is shown is here, as I go through the rest of this slide, is the difference between S1, R1, and S2 gives us the 38 pips. R1 being 128.72, S1 being 128.34. That gives us our 38 pips. Difference between S1 and S2, the two support areas as we were going down, is 21. So it gives you a risk reward of 1.8 to the downside. We'd already moved 38. 21 still to come potentially, but that's already played out. So again, take the math to the next level. Gives you, if you want to do that, or just use the simple, areas. Obviously, at this point, the break of S1, next level down from a pivot point of view would be in S2. It also happens to be the bottom of the Bollinger Band, so that would be a nice area to set your target anyway, without necessarily doing the math. But the maths fits up to it. Target 3 would be, if the candle closes and breaks out of the Bollinger Band, would be this next moving average here, which is above S3. But obviously, the further away we go, the stronger the move, the less likely is of these areas to be hit. You can, I'll come on to that in a minute. We can crunch the numbers, and again, you can see what's that? How that is on our chart here. You can see here. So this is going back to last Tuesday. You see, all we did, it was positive, wasn't it? Because we were above the pivot point, but we got above what R1. We didn't get to R2. Next day, we just went through the pivot. We touched R1. No, we didn't. R1 was there. S1 was there. We didn't move away from the pivot point. Friday, similarly, we didn't do the same thing. So that compressed the range for yesterday. And yesterday, we absolutely blew out the water, didn't we? We were very, very quickly. We opened above the pivot area. So the 1, 2, 3 were above the pivot. That was positive. Straight through R1 and R2 in, as the market opened, and over R3, and off we went. So we're into no man's land. Where did we go? We went to a big round number at 115. We couldn't quite get to 116, but we had a very strong day, and we held 115 into close. So that then became our pivot as the market opened yesterday. So this morning, because of the move we'd had yesterday, the pivot is now elevated. So we're all the way up to 115 is our pivot area, and our resistance today. Again, we haven't got anywhere near it at 116, but again, it's a round number, and our resistance area is there. In fact, we're giving up some of the gains over the last couple of days back to S1, S1 sits at 114.11, which is 10 pips, 12 pips above the key 114 level as well. So that's a move down today. Okay, so the objectiveness is in the numbers, because it is what it is. It's based on the price action. That's why lots of people like them, and I say they can be used on multiple time frames. This is a screenshot from earlier. This is again the floor pivot, 5-day countback, and the hourly time frame here. And so this is the daily pivots against the same chart we've just been looking at live, and that's just a screenshot from earlier. Okay, and again, we've got the ATR here, the average true range. You can see it's fairly flat. There's not a lot going on. In fact, it dropped quite significantly last week, and again, you can see that there. We've got no movement on the Thursday, Friday. See very low volumes. Came back to life yesterday. ATR moved up because the volumes moved up, and the volatility moved up, and we got bigger candles again today. So we've held our hourly ATR around about the 23 pips level from whatever it was back on Friday, went all the way down to something like 10 or 12 pips probably. So that's the hourly time frame. On the daily daily setting with the floor pivots. This is we've clicked. I'll come back. I'll show you the clicking. The different types of settings. So here, this is the auto setting, and this is the daily time frame now for the same pair, so the euro dollar. But again, you can see the movement down we had here during December and January. This floor we had here in actually this might be weekly pivots. Actually, I haven't said that. I think it might be, but anyway, we'll show you live in a minute. And then obviously the big rally we had in March and April continues. So obviously our weekly pivot suddenly leapt up during April to 107.20. Yeah, it must be a weekly pivot. So it's because of the simple maths involved, it's applicable for all time frames. So if I was going to leave that slide for a minute. Let me just go back to. I'll come to the slide in a minute. Let me just go back to the chart. So, so that's our daily one. So the one I've just shown you was if we change it for higher time frames. I quite like it. I people always ask me about, what's going to happen in 2026, or what's going to happen in 2027, or the end of the year and the beginning of the year. So I quite like the weekly and the monthly pivots when we're and these higher time frames. So we put the weekly. So what I did there, we put the weekly time frame on. So if we move up to the daily time frame, you see the spread of the pivots moving up. So here you can see on the daily time frame with weekly pivots, the weekly pivot is now 113.50, 113.60. So again, you see this clear, strong weekly rally we've had in the euro dollar over the last 6 weeks. If we go to the actual weekly time frame for the chart, we lose the pivot points. So the pivot points are gone because we're looking at weekly pivot points. So, but this is the weekly chart. You can see what a strong 4 or 5, 6 weeks we've had for the euro, which we're all aware of. So if we then, what you might want to do then is go up another time frame. So we go up to the monthly, and these are much higher, or much stressed out on a weekly time. So we're looking at a weekly chart with monthly pivot time frame on it. So you can see what a strong 2 or 3 months we've had for euro dollar to the upside from quite a relatively strong move down, wasn't it? If we count back, you can see if we extend the count back here more than 5, and go back to say 10, you can see it was a similar move to the downside. Remember when we were talking about parity for the euro earlier in the year, we were all the way down here. S3 here, for instance, took us to 96.85 here in December. So we had a very strong dollar. That final quarter, euro was falling. So you can see the pivot point going from 111.25, all the way down here. In January, we went to, in fact, we weren't even low, didn't we, in February, 103, and we were talking about parity as the price. Here you can see the price down there at 102, and it didn't happen, did it? We had a massive turnaround come the beginning of March, as we had that expansion of spending and fiscal rules getting chucked out the window by the Germans as the tariffs were announced a month later here, the 2nd of April, and that's just clobbered the dollar and lifted the euro again to this 115 level we're at the moment. So the levels to be tested, levels to be played out, but get your settings right. So if we'll just go back to our intraday setup here on the so we're going to go to daily. I don't want to, we go back to sort of 5 will do, I think. Sketch the week, and we go to our time frames. Let's start with our hourly, and we'll drill down from the hourly. Okay, so these are our daily pivots on with hourly candles. So let's just go down to the other extreme. So these are daily pivots again, but let's look at it as a scalper. Where are we looking at it on the 1 minute time frame? So obviously the 1 minute time frame is much more compressed. This is I'm not sure what that 114.92 line is. There's our 115 level. Let's just step up an area. Sorry, that's our daily pivot, isn't it? So actually, let me go up to the 5 minute because it's a bit too, can't really see much. So as we can see, we've been playing around with the pivot all day. So if there's the beginning of the day, there we are. This is a 5 minute chart now for the euro. See that a wee bit. So how would we play this? Well, day's kicked off. There's our pivot. We're positive. It's positive. We're above. We broke quite significantly. I'll come on to this in a minute. That was a significant breakdown for the pivot point. The first test, but it was at 1:30 in the morning, so I wouldn't be interested in that. When I come in, I look up. I come in at say 7 o'clock. Where were we? We were sort of relatively positive. Euro was still positive. We were above our pivot point. Our pivot point was just shy of 115. So that's obviously a caveat bell. That's my high of the day as I come in. Look at this at 6:30. So I'll be looking. If we're going to go long, we're above the pivot point, and I want to go above 115.45. That looked like the high, and it didn't happen, did it? The European traders come in and we test. Interesting, we go down, down, down here. 8 o'clock, we test into the pivot and under the key one. So we go under 115, but we don't want to go much lower. That there at 8:40 looked like a significant break. This candle here on the I'm just purely looking at this on a 5-minute time frame. That would have been a short. It didn't work out because immediately after we were out, I would have had a stop loss above the previous candle there. We'd have been out. So not a lot of action. So it's holding. And I'd want another significant break. That was a relatively significant break. That one before it wasn't too great. That was a bigger candle. So I'd have been short that one, and that one would have played out a little while, but it didn't. Again, it ran out of steam quite quickly. Target target S1 is this one here at 114.10. It would taken a while to have. Where do I say it's that one that didn't work out, did it? That one would have worked out, but it stalled quite quickly. But again, we haven't got back under, so we'd either be holding this short still because we haven't gone back over the pivot area, and it's now providing resistance. So we could have, as that's been rejected, I would have gone short again then on that candle there because we've ran to the pivot, but it's failed to break it, and that's quite significant. Then we got a doji candle. I hope you can see all this. It's zoom. I don't know if I can make it any bigger here on the 5-minute, but so that would have been another short entry there. And then again, not a lot of action today. There's not much moving action, but the next big candle, if you can see here, even on the 5-minute time, is a negative one. So that's adding to confidence that we're, might be. That was a fairly chunky up candle there at 5 minutes past 5. If I'm still in this one, but I'd be short this with my stop loss at the pivot point here, 114.95, and we've moved down, and this is still short basically. Whether I'd have got in again short here at this last candle because it's relatively big compared to us, but there's not a lot of action going on today. So it's not a lot moving it, so it's a bit boring as far as price action is concerned. But from a couple of failed, that would have been a failed one this morning there on open. But we've been biased to the downside, haven't we, ever since? The next big candle was that negative one there at 12.55. So not a lot to get excited about today, but we were short. It looked like we might be going back up. This was quite a hefty one, but the pivot area held. Certainly 115 hadn't been tested again. And then the next big down one was there, I say 16, just around 5 o'clock. To the downside, and then we're down again now, and we're at 14.30. So we're in the money on that one, having failed earlier on in the day. Just simple 5-minute time frame. If we go up the time frames, obviously it becomes a little less or a bit clearer. Okay, so that's 5 minutes. 15. How's the 15-minute treating us? So there we can see the day a bit more clearly. So again, we had as I got in this morning, it was looking quite positive. I would have put the high of the day there, 115.47 again. That's a nice down candle, but we were still above the pivot, so it was still negative. I'd have got short on that one, certainly at 8:30. Immediately, I might, well, the stop loss would have been here on that one, to be honest. Even though it turned around immediately, so I might have actually, if I mean, close that out as it's, but you can see it doesn't want to get back above 115, does it? All over lunchtime, all over the early European trades. Remember, it's been a long weekend, so, but there's no information. Next candle again is a big one. The next significant candle, we've had a negative one there, but it didn't go over the pivot point. That one did breach the pivot point. That was nice. Immediately we came back, but again, we couldn't break 115, so we're still short. I would have added probably here or here and down. I might have got out on that big candle, but again, The pivot and 115 above it has held. So now my support area, my stop loss is now here from up here, and I might have added on here, and I might have even added somewhere going down here. I might have added it again there, but we might be running out of steam at the moment. Obviously, volumes have died off. It's 6:45 in London. Obviously, New York still open, but obviously the volumes on the forex market is very slim. But you can see how the pivot point has helped us to decide our direction. Initially positive, certainly before I got into, 7 o'clock would have been probably the first kind. I've been fairly positive on that one if I'd seen that one, but that would have been the first. Oh, hang on a minute, 7:30, and then the break at the pivot point, but immediately back. So yeah, I would have probably got in at that point, and then yeah, if I'd had my stop loss there, which I probably would have done, just left that to run, see what happened. But no real news driving, which is quite good because it finds its natural position. So we've had 3 or 4 days to the upside. We've had a cooler day today. Dollar's come back a wee bit here on the 15-minute time frame. Okay, so we'll come back to that again in a minute. So I just wanted to show you some research there that I first got from I can't remember, mentor of mine, a guy called Trevor Neal, and he first showed me this, but it's from Investopedia. Did some research back in a long time ago now, nearly 20 years ago, on 2,000 trading days from when the euro first was created. So 2,000 trading days to the 12th of October 2006. So it's a big sample, isn't it, by anybody's count? How good are these areas? So these S1 and R1 levels, these are the key ones. This is why this lady trader friend of mine just uses S1 and R1, not the other two. But anyway, as you can see here, let's read the slide here. So the actual low has been lower than S1 at 44% of the times on a daily basis. So the actual low of the day was actually lower than S1 44% of the time. And higher than R1 42% of the time. So 853 times out of 2026 times. The R1 level, the actual high of the day, was above R1 42% of the time. So you see that's a key area. So we're capturing a lot of the price action as you, by its very nature, you'd expect that between the pivot area R1 and S1 captures a lot of the action. The actual low of the day was lower than the S2 area only 17% of the time. And the actual high of the day was higher than R2, also only 17% of the time. So it's interesting that these are they're fitting both above and below, aren't they? That's the interesting calculation. So 340 times, 350 times, are we either higher or lower than S2 or R2? Okay, and then the extreme move, the actual low has been lower than S3, only 63% of those days, or those 63 days of the 2020 days, and 52 days, only 52 days. The actual high has been higher than R3, so we've had a volatile, strong move, either breaking S3 to the downside or R3 to the upside only 3% of the time. So when you do get to those levels, that's why lots of people look for a turn in the market at that point, because it's only happening 3% of the time. The caveat of that is, though, once we do that, that can be an incredibly strong move. So you need to look at some sort of volumes on that. And remember, pivot points can be applied to everything, any asset. So it's gold, stocks, indices. It's not just, we've only looked at the euro as an example today, so, and other forex pairs, but it can be applied to any asset, and that's the beauty of them, because it's a very simple calculation based on the previous time frame and predictive for the time frame that you're trading. So in summary, then, we act as primary support and resistance levels. Have to be used like normal support and resistance levels. The more times a pivot point is reached but not broke, the stronger the pivot point is, as we've just been seeing, as we've been moving around it. Resistance holds, spelling potential selling opportunity, stop loss above the R level, or any of the pivot R or support levels. Support holds, buying opportunity with stop loss below the S level. So if we hit S1 and we don't go much below it, that could be a chance to go long. As we just seen with the euro today, the pivot point kept banging about. We were broken it, but we ended up moving down. Strong pivot. It's around that key round number as well, 115 here on the euro. So we continued to move to the downside. Pivot acts as predictive support and resistance levels. Hence, you can use them for targets, turning points, and support levels as well. Price usually bounces between S1 and R1, but if the market is very tight, we could also breach S2, R3, and even, as we've just seen, only 3% of the time, S3 and R3, but we've just seen that on one of our charts, didn't we? So look for other indicators, whether you're using Bollinger Bands or, as I say, MACD or stochastics to look for returns. Whatever it is, as with any indicator, don't just use one. But look, I know again, this particular female trader I'm talking about, she just uses pivot areas, support and resistance 1 and 2 as well as predictives. There's lots of techniques. I've got one I show you in the trend following strategy. Other alternatives here. So if we're going to go short, identify the bearish momentum. So we're under the pivot point, we're moving down. If the prices broke pivot points to the downwards, we're looking at a selling opportunity. If we continue to move down, put the stop loss above the pivot or the recent resistance level at a swing point, and take profit at the next resistance area. Okay, that's what it's telling us. Whether you're using floor pivots like we're using today, or Fibonacci pivots, or Woody pivots, whatever it is. As we're moving between the areas, that's trailing it down a bit like when we're using Bollinger Bands. We broke below the midline. We're looking for it to move to the outer Bollinger Band. We broke above the midline. We're looking to move to the upper bit, Bollinger Band. So same with long positions. Have we got are we moving higher, or are we just sliding sideways like today? If we are moving, look for us to test our next the resistance levels. For above the pivot point, look to buy. If we're below the pivot point, look to sell. Target S1 as the first target area, going short. R1 if we're going long. But again, you can still use the once we've moved away from the pivot point, you can use any of the following R1, R2, or S1, S2, S3 as potential target areas, and use the same sort of approach. So are we going to touch it and bounce from it, or are we going to break through it with some momentum? That's what we're looking for. Okay, as you can see today, again, I'll just bring this, this 15-minute chart on the euro is a really good example of what we've just been talking about. We've had, there's not a lot of direction, is there? We've been above the pit, so we would have been long here. That's our short. It didn't work out. Look to go long, potentially here, but again, if you'd been around, then that was quite nice. That was quite positive, but then it came back quite quickly here into the into the European Open, and we only got halfway to R1. Okay, what we did do though, we got to yesterday's high, which we didn't get to yesterday's high. We certainly didn't get to today's R1 level, but that's today's high as far as, and so that's going to go into tomorrow's resistance and pivot and support calculations. So that's our current high, and that's our current low at the moment. Within, again, and you can see within R1 and S1, which is fairly common, isn't it? As we've just shown from those 2,000 trading days for the euro. So, but this is biased now to the downside. So we've found a bit of support here over the last 20 minutes, just the way I've been talking. They're at that 114.30 level, and we're currently bouncing off that. We bounced off it once, came back to it, and looks like it's a stronger bounce from there. So that might be our low for the day, given that we're at 7 o'clock at night London time. So obviously volumes are very low on that, and there's no news moving that unless something comes out of the White House, obviously. But we're still negative for that one. Okay. So again, a caveat here: be careful about the action of some massive fundamental news, like something like non-farm payroll or some big significant news. Be careful about the pivot points. The positive flip on that is though it still gives you some target areas. So for instance, even if Trump suddenly sent something out on his Truth Social media about Jay Powell again, the first area would be this pivot area, would be the 115 area to the upside, wouldn't it? Next target area would be 116 where the R1 level is. But before that, we can see we'd have our high of the day at 115.45, and then yesterday's high 115.70. So we got these levels automatically, and that's the beauty of them. If it's very positive for the dollar, we would expect this S1 to get breached really, really quickly, wouldn't we? Because we're quite a long way toward it anyway. Below that is the big round 114 round number, and then S2 down at 113.10 is a bit of a stretch, but all it's doing is taking us to the pivot area from yesterday as well, below the 114. But this S2 level, if we look sideways again, today's S2 level was around about our support levels on Thursday and Friday, the initial S1 levels, but it's certainly a new low, wouldn't it, this stretch there? So it would have to be something significant that bid the dollar. I mean, it may be coming over the next few days or so, given the weakness we've seen in the dollar recently. But at the moment, the trend is very much a weaker dollar market. So that S2 is a bit of a stretch, but you might be worth, but this, remember, this is only currently for today at 113.10. So 113, 112 is a bit of a stretch to the downside. So 114 certainly it can't be ruled out as we move forward. Okay, so that's how we play with pivot points. Okay. Let's put that back there. So that's just some ideas of how we trade it. Another way, I like to either we bounce or we breach basically the pivot point. So what you're looking for, again, depending on the time, let's leave it this. Let's go back to the 5 minute or the 10. Let's split the difference. Let's go to 10 minute. What you're looking for. And you can use this with the pivot point or R1, S1, whatever level we're getting to. Okay, so what we're looking for is a bounce or a breach. So after a first touch. So here, what happens here? So the first touch of the pivot point today was at 1:30 this morning, and it was a significant break. Okay, so this is a 10-minute candle. So the first 10-minute touch of the pivot point today was at 1:30. It was a negative, quite a strong, big sized. Don't know if I can zoom in a bit more. Don't know if it's going to let me. It doesn't really make a difference, does it? No. Anyway, so that was the actual break. I'd call that a break. So we formed a low. However, the lower the following candle was actually lower. Sorry. Was lower. I think you can see that actually. This little doji candle here was lower than the low of the candle that broke. So I'd have been I'd gone short here. What happened immediately though was we turned around and we moved back up for the next 20 minutes. So that short didn't play out. But the next touch from underneath the pivot point actually didn't break above it. So so if I'd had my stop loss just above the 115 level, like we said before, we'd have still been short on this. And then we could have either got out on the break, either been stopped out there as it's gone back up, because that's a positive. So we've touched here. Sorry, I'm confused. I'm confusing myself now. I'm confusing you guys. Right, let me start again. So this is broken the pivot point. So we'd look to go short on the next candle if the low of the next candle is lower than the low of that candle, and it is. So we've gone short here, there. And we go again with our stop loss up here just above 115. I would have, in fact, it might have been out of comfort. I would have had it there. Okay, so back above the pivot point, testing it to get tested and then come back down. It didn't. We tested it, but you see we went high. The next candle was actually the high of that next candle wasn't above the high of the candle that touched the pivot point, was it? So that was still, I was still looking, that was still positive for my short from here. Okay, the next touch, it didn't actually touch there. Next touch was there was a positive break, so that's gone higher. But the following candle was actually lower. It didn't get higher, so I was still quite positive that we were still short this here. And it wasn't until the following candle where we broke away. You see there's air now. You see air, fresh air there at 10 minutes past 3 candle to the upside. That would have not stopped us out, but I would have potentially closed out. I've been trading this on the short time frame, but we certainly would have stopped out on the next candle, and we reversed and gone long, because what we've done here, we've used the pivot area support. We're above the key psychological 115 level, and we've reversed and gone long, and I'm long there, and my stop loss is probably down about here. Well, I've trailed it up and might have got stopped out as it's come back down there. Okay, so that would have been a successful trade from that sort of trade. What happens next? Next time we touch it, we're looking to go low. We don't. It close above it, doesn't it? So that's we might want to go long because it's held as support. Well, whether I'd have done that or not, I don't know. But this is the start of the European session, so I would have been, I would probably have gone long at this point. We then go down and touch it, and we go lower. But again, the previous one is still long, so I'm still long here because the pivot point's held. Then we touch it again. It's not lower. We're a break away. I might have added at this point, but then it touches, and then it does make a new low. So they've been out there, potential short, but you can see the candles are really, really small, not a lot going on, and we're just like meandering around. It's like, it's not worth it. That's the key one there. That one there. Then we break away, a bit like we got here, the breakaway. So that would have been short there. Here at 1 o'clock this afternoon. As I said, we moved down. The pivot, my stop loss that would have been up here. We've touched it, but we've moved lower, so I'd have added there. See what's happened? We touched the pivot point. The next, so if this was going to continue higher, the next candle should have been higher than the high of that, which was the pivot point in the 150, but it's gone short, so we've gone short again there, and that's why we're still short using that strategy, using the pivot point there. Okay, we can use exactly the same thing as we get to the next level, which is R1. But again, that's probably still our target zone to the downside. So there's a few pips on that one, but there's not a lot of action going on. So yeah, it's a lot of stress for a very, very little gain when we got no price action. Okay, I hope that's made sense, my friends. Pivot points are great. They are very simple to understand. It can be applied on all sorts of platforms. Pivot R1 and S2, R1 and S1 are the most significant 3 lines if you only want to use 3 of them. But don't rule out S2 and S3. They can be quite predictive of what's going on. Okay, so I hope that's made sense, my friends. I've had no questions. I know many of you are here today. So we've looked at how we set up pivot points, how the maths works, using it as a trading signal, key support and resistance area, and the effectiveness of S1, S2, S3, and R1, R2, and R3, and how to apply them to multiple time frames. Remember, we've used woody pivots today. Floor pivots today. That are default standards, but there's lots of ways, different pivots, points, characteristics if you want to delve a bit further into it. But for me, the floor pivots on a daily time frame, creating where we're going to be tomorrow is predictive enough for me when we're trading on an intraday basis, or where we are going to be next week on an end of day basis. So that's the power of pivot points as far as I'm concerned, my friends. So if there's no questions, I'll wrap this up. I'm just over the hour. People ask me about my books, Trading in the Zone, Resistance of a Stop Rate, and the Market Wizard series of books. Very, very highly recommended by me. These are, this is over 100 years old, this is 20 odd years old, and this is 30 odd years old. 2 recent books I've really enjoyed, and I've got a whole stack of trading books. One from 2022 was The Best Loser Wins by Tom Hugard, putting into words, into a really great, easy to read book, my approach to trading over the years. It's amazing how people coalesce around the same thing. But normal thinking never wins in the trading game. You've got to think differently. Add to winning trades, add to target positions, and a really well written and well researched book as well, Mastering the Mental Game of Trading by Steve Goldstein, came out last year as well. A really really makes you think, the power of the inner self. And that's what I've said for years and years and years. And again, Steve has put in writing into a book a lot of my thoughts as well, but much more articulately and much better than I could ever could. So congratulations to both Steve and Tom for their 2 books as well. So I can never have too many trading books. So if you want to make an old man happy, buy me a new trading book. So take care, my friends. Thanks for your interest. Remember, the proptrade.com. We are here to help you guys. And it's a relatively quiet-ish week. Tomorrow, I can't remember what I'm doing tomorrow, but as I say, what's happening tomorrow? Wednesday. It's I'm on in my diary here, but anyway, I'm saying it's a relatively quiet week. It's busy for stock investors. There's lots of companies reporting. Obviously, the indexes have been very much under pressure. We are still short, although they've bounced up today a tad. Which bring the charts back in before we wrap up. The stock markets have had a bounce back today from the big move down, but we're still short. The Dow was hit its target. I say hit its target on Friday, didn't it? And that was our target. Our stop loss is pulled down now to here, but we've had a good up day today. Back to T1 from Friday. You can see the daily time frame, which is how we got in on this one. So we were short here, weren't we, on the 16th, and moved down really aggressive. That was we didn't really set a stop loss, but we'd taken that out yesterday, and we're back to it today, interestingly, but it's still weak. 20-day moving average all the way there at 41. Similarly for the S&P 500, the stop loss is a bit higher. It's not actually at the entry yet, but we're back to entry. Interestingly, we'd have been taken out of that, but again, it got to its sort of first sort of line in the sand I'd put on the charts on Thursday. This T1 area didn't actually set one when we actually opened it up, but that was a 40 odd points, 48 points, and then the Nasdaq was because it's only half position, it was 96 points, but we only took half. This is a 400-point move down to this T1 zone, which it hit, but again, it's bounced back to the entry level. Our stop losses up here for the second 50 pips. So good, interesting day today, given yesterday's move to the downside. I know that the Europeans are back. Stocks have moved back over the 18,000 level for the NAS 100. So, guys, thank you for your time. I need to go and get some dinner now, and see you all tomorrow. So take care, be safe, and as ever, may the pips be with you, and I will see you all again tomorrow. So take care, everyone.